Here we go, here we go, here we go, here we go. It's markets in the morning. Let's go. Hey, what's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Welcome to Markets in the Morning. Today is Thursday, May 11th, 2023. Markets in the Morning, where we take a look at the price action of the markets, any news that's going on as we get ready for the stock market to open in 3 minutes from right now. We'll take a peek over here at the Bitcoin price chart, the XRP price chart, the Ethereum price chart. Of course, we'll look at the stock market, precious metals, yields, DXY, and any type of news that is relevant or important. At least I get to be the dictator on it to say whether it's important to me or not. We'll take a look at all that stuff. So let's go ahead and dive right in. So first things first, Bitcoin sits at $27,386 as we start the morning. Yesterday, there was some wild volatility. So I'd put out a video yesterday talking about, I thought something was coming pretty quick. We ended up getting a massive kind of like flasher. I'll put it on like the 1 minute chart here. There you go. Big, massive flasher that came in here. I had mentioned that I was looking for something within the next 48 hours. I still don't think we've even seen it yet. I still think that's just kind of just part of it. I'll show you guys examples of that here in just a minute of how that something like this is. We've seen that before in these structures, especially with what we're looking at right in here. So I'll show you examples of that here in a little while. But after a kind of like what seemed to be like a short squeeze in the morning, coming off of that CPI data, eventually held itself for some time and then fell. But what was interesting about it that we kept pointing to in Markets in the Morning, and I was pointing to in my video, is that the stock market had already, while it did the same short squeeze in there right here, it had taken it back pretty quickly, but it just took Bitcoin several hours for that to eventually end up happening, but then it eventually did. So, all right, that's just kind of where we sit at for Bitcoin right now. Still kind of just a waiting game. My guess is that there's going to be kind of a plunge that happens in here for Bitcoin before we can get this show on the road and get this correction completed in here. As for XRP, still sitting down here at the lows on top of the 200-day moving average. The second time to whack right into it during that moment at that time right there. So we're still just kind of creeping along here for XRP. Not a whole lot to say there about that. Ethereum's the same story. It's just creeping along with the market. Now, if you've noticed, of course, there's been just incredible hype around meme coins lately. A lot of these meme coins, right, they're not on exchanges. So how are people, getting these meme coins? They're being put on Ethereum. They're using Uniswap and MetaMask to be able to do those. And I saw something real interesting in here. If you look at like the ultrasound money page for Ethereum, if you know that when it switched to a proof of stake model, it moved to a deflationary supply model, in that more gets burned than issued. And just in this last week or two, it's pretty much gone parabolic on how much of the Ethereum is getting burned in here. And we could see since the start of the switch over into a deflationary model, the average rate has been negative 0.27% deflation in supply per year. But you look at like the last 30 days, it's actually been negative 1.32, especially with all this meme coin stuff happening and all of this stuff. The last 7 days, the rate has been negative 2.89% of Ethereum getting burned with all these transactions taking place. But you could just see how it just picked up massive speed on how much Ethereum is actually getting burned right now with everything going on out there. And I thought it was interesting to look at that, right? We know that they have the number one total developers for Ethereum, and that it also has a deflationary supply. So very interesting to see that happening there. As for the stock market, now that we're just now getting opened here, we can look at the Dow Jones. The Dow is down 230 points to start the day. So you got pretty much gapping right there on the opening right in there. Still not able to get through these retracement levels yet. Just a waiting game to see how this is going to end up playing out in here as they are stuck underneath them. Looking at gold still fighting that all-time high, not showing us what the card is going to be playing out just yet, as these 1 month treasury yields are still just stupid high, 5.44%. That has inverted every yield. The 1 month the shortest dated treasury bill. It pays the highest out of any other bill, note, bond, all of them. Just silly. As for DXY is catching a little bit of a bounce today. We know it's just been kind of trending like this. It's been holding that low since April 14th over there, which is also the same low from February 2023. Still just waiting on this thing. My thoughts are we will see down in here into the 99s and 100s. Question is, how's it going to respond there if it's going to find some support in that levels? We've done the wave counts on this, rolls back up to wave 4 within wave 5. It is normal to pause out in here for some time before finally it kerplunks in here. No telling how long that time will take to do that. As for economic data that came out today we got the PPI, Producer Price Index. Let's pull this up month over month. So yesterday we got CPI, Consumer Price Index, and the PPI is the U.S. Producer Price Index. So the Producer Price Index measures the change in price of goods sold by manufacturers, and it is a leading indicator of consumer price inflation, which accounts for the majority of overall inflation. So we registered a 0.2, expectation was a 0.3. Taking a look at these, you could see this is all we were seeing inflation for these guys, for the producers, back in 2020 and 2021. Then you can notice here, starting in August of last year, started registering much lower numbers. We're still registering those low numbers in there. The big one I saw for year over year, right? Expectation was a 2.4% year over year, came in at 2.3%. Take a look at this chart right here. Look how low we've now gotten. We're down to 2.3% for the Producer Price Index year over year. Let's zoom out a little bit and take a look at that. Look where we are way down here. We are back in historical norms. So it is a leading indicator of consumer price inflation, which accounts for the majority of overall inflation. So there you go. We at 2.3%, we're sitting in historical norms. These are 2018, 2017 numbers that we're seeing in here. We could try to make a guesstimate on this. Let's see. Which ones are we replacing still? So we still have high readings for, just like over on the CPI, higher readings for June and for July. So if we kind of just stick to the average here, let's just say we do 0.2s and 0.3s, we will knock that down by another 1.5%. So you could see this thing get all the way down to like 0.7. You could see it get all the way down there. So this thing is on track to go back to historical norms here for the Producer Price Index. So inflation, interesting to see. We're getting back on track there. So as for crypto, right? Big move happened yesterday. Let's talk about what we're saying here. So like this particular thing right here, right? We've got this big whack that shows up right in here. Now, a lot of people wrong-footed. So like I've talked about it a lot, that in these types of structures, what you'll typically see is people calling for manipulation. I think I've brought that up at least half of a dozen times, that if we get a move down, people are going to call for manipulation. You could see people immediately trying to excuse away what happened with price action yesterday by blaming U.S. government selling 10 million Bitcoins, right? Which got disproven later in the day as that being the cause of what happened. These types of things, I've seen them before. We actually, we're looking at this, like this is a normal structure for how these corrections can end up playing out. One thing, we've even looked at this versus the top back over here, right? So I'll show you something that we do see, that kind of initial, almost fake out, but it was kind of a foreshadowing warning. Let's get this here. Okay. So we're in a pause, right? We know we're in something like this right in here, right? But there was a foreshadowing warning wick that happened in there too. So don't, I've talked about fake outs, right? Are we going to see a fake out that ends up happening in here? That when we started plunging yesterday, I was kind of like, all right, yeah, well, here we go. This is what we've been talking about. And then it ended up catching itself a little bit of a bid. If you notice that some altcoins and Bitcoin kind of recovered a little bit, right? But then unable to sustain itself. Started thinking to myself, all right, well, did we have ourselves a fake out? And then just started peeking around a little bit to recognize that can be our foreshadowing of what's to come. Where are we? Right here, right? So these things can happen in here. Don't be too fooled just yet to think that things are okay. And you can take a look over at like a total, right? So kind of total's kind of giving us a little bit of a foreshadowing right in there. So just, you know, we're on the caution side right now. I do not feel like we're out of the woods just yet. So careful out there. But again, like my thoughts on all of this is that this is a correction, and we will work our way back up. So just part of it. As for news, so that's the things we've covered, right? We've talked about that. XRP still sitting here at these lows on top of the 200-day moving average. Ethereum trending. We talked about how the deflation is just skyrocketing right here. Or like if you look at how many Ethereum are being burned, I mean, 400 Ethereum have been burned in just the last hour due to kind of a lot of this like meme coin hype that's happening here, right? In the last 5 minutes, 36 Ethereum have been burned. I'm sure you guys have seen gas fees if you've played around with any of that. The last 7 days, we've been burning Ethereum at an annual rate of 2.89%. So absolutely deflationary and certainly picking up speed right in here. So it'd be interesting if we ever end up getting a full-blown meme season or whatever to see how much that really impacts that. So Ethereum's deflation has just been skyrocketing. As for news, let's dive right in. Bitcoin fees plummet 95% as Bitcoin price recovers. Okay, hold on. Let's see here. I haven't checked that out. Let's see. Bitcoin transaction fee. Oh, lame. They won't let me view it without registering now. They must have been getting a lot of traffic after this, and they decided, oh, we're going to force people to subscribe. I'm trying to look at Y charts. Anyway, I'm showing that as of yesterday, it was down to $14.05. So we saw it 2 days ago. It was at $30 per transaction. Right now, I'm seeing $14.05 per transaction. They are saying right here, what are they saying? Plummet 95%. Where is it? Come on, can you make this? Okay, next block Bitcoin fee dips to under $2. And the silver lining for Bitcoin's past 24 hours saw a major shift in on-chain transaction fees, those deflating considerably after reaching levels that had caused a widespread outpour. Okay, it was $1.80. Live numbers from Mempool had next block fee rates at 47 Satoshis. So according to that, on May 10th, the average fee fell below $15. Let me see. Am I looking at May 10th? Yeah, so I'm looking at May 10th data. So they're showing that it's $1.80. So we'll see what this updates to tomorrow. So we'll try to remember to cover this tomorrow because it's true. Like I'm looking at Y charts and it's pulling from May 10th, which is going to be yesterday. So as of yesterday, then that is a correct statement to below $15. I'm showing as of yesterday $14.05. So we'll see if this thing updates tomorrow to under $2. And it sounds like whatever's going on over there with Bitcoin has potentially chilled out. All right, there we go. There was like some news that was like worth covering. Sweet. Binance looks to the UK. We can't keep putting band-aids. Meme pool full. Here's how exchanges adjust to Bitcoin withdrawal fees. Hot stories. How low can the price go? Look at that. That's the one that gets the most views, right? So that's probably what we all want to see then, right? Nobody cares about any of this stuff. To catch a scammer, Kraken builds fake crypto. Who cares? Paraspace team clashes with CEO over alleged whereabout. Okay. War of words. OKX takes a subtle jab at Coinbase in a new ad campaign. Bitcoin price on Binance US crypto exchange at a $700 premium. I think everybody wants to know how low can the price go. Let's see who they're quoting from Twitter. Head and shoulders pattern puts the price below 25K. Hey, look at that. And suddenly everybody's pointing to my prices. How about that? Into the 24s, right? April CPI data release. Okay. All right. So they say if this is the head and shoulders, that it would go down into the 24s. Cool story. Yeah, that's what we've been talking about. So we'll see if we end up getting our breakdown happening in here. I've been seeing the head and shoulders everywhere now on Twitter, so pretty much everybody sees it at this point. Interesting thing, like when things get so obvious, everybody kind of like prepares the exact same way, and that can cause some volatility to happen. So we'll see how it goes. We're just waiting on it. As for the stock market, now that we are more open, Dow Jones down 275 points. NASDAQ, crazy, flat, break even. Roblox up, Google up, Meta up, Amazon, Coinbase up, right? And then head on over to some Dow Jones stuff, Caterpillar, Microsoft down. So, man, I wonder who's the one really pulling down the Dow. United Health is almost flat. Somebody's really pulling down the Dow. Wonder if it's banking stuff. So, all right, looking at gold and metals, everything is slightly down. Silver's down quite a bit, down 3% today. So is copper, with the DXY really kind of making a move. DXY just crossed 102. So there we go. We're getting a move in DXY today. Again, what you usually see in these things is these will just kind of go like this until finally they plunk like that. So I wouldn't be surprised if we get stuck in here a little while, but still inevitably that's where I think we're headed. And then the big question is what happens right in there. But probably a little bit of hedging and protection to take place in this area. All right, other news. Let's go over to the. I didn't hit these guys. I never really find anything on CoinDesk. You guys notice the same thing? It's kind of just so cluttered and not very organized that nothing really stands out. It's just a bunch of words all over the screen. I don't really know where to look. Like at least on Cointelegraph, I know that like to look over here on the right side, and these are going to be my stories to look at. Over here on CoinDesk, it's just like cluttered. I don't know what to do here. Bitcoin slips after April PPI data. The rise of the meme economy. Okay. Stock market. Let's go. Pacific West shares tumble 20% after regional banks say the deposits fell 9.5% last week. Well, sure. Everybody was panicked about them. Jamie Dimon warns panic will overtake markets as U.S. approaches debt default. Yeah, and I think he's crying to stop short selling. That's weird. I don't believe that for half a second, but it's weird. Jamie Dimon warns new rules will make things worse for banks. All right, I think we're probably going to have to check on that. This is the headlines on both of them. We'll read Bloomberg's version. No, Bloomberg's not going to let me. CNBC. Here we go. JP Morgan Chase CEO Jamie Dimon said Thursday that markets will be gripped by panic as the U.S. approaches a possible default on its sovereign debt. Dimon said he expects that a default will be avoided because lawmakers will be forced to respond to growing concern. The closer you get to it, you will have panic in the form of stock market volatility and upheaval in treasuries. Yeah, I would say so. JP Morgan Chase CEO Jamie Dimon said Thursday that the markets will be gripped by panic as the U.S. approaches a possible default on its debt. An actual default would be potentially catastrophic for the country, Dimon told Bloomberg in a televised interview. Dimon said he expects the worst case scenario will be avoided. However, because lawmakers will be forced to respond to growing concerns. The closer you get to it, you will have panic in the form of stock market volatility and upheaval in treasuries. Dimon joined a host of business figures and administrative officials making dire predictions about the consequences of failing to raise or suspend the U.S. debt limit. Now, I know, guys, we've all been through this rodeo before. We've all seen it 100 times. We know how the story has ended every single time. It always ends with them raising the debt ceiling. The last time we had a debt ceiling issue was in the summer of 2019. So that at that time, that was Trump was when he was president at that time, they removed the debt ceiling entirely. So it was entirely removed, and they had set a timeline on it of 2 years. So what do you know? C19 happens. What do you know? 2 months later, you have the repo bailout crisis with the Fed and the banks and the overnight lending market 2 months later. And then, 8 months later, we have C19, and then we go and we just print to the high heavens, right? And then that ran out in the summer of last year. So that ran out, and now we've all been playing the whole debt ceiling game all over again, right? And we're all very used to it, that the debt ceiling will get raised. It's what we're all accustomed to, and we expect it to happen. And that's what I would expect to happen, right? Why would I think any differently? Why would I think this time is different? The only thing that is different is that the bond market is saying otherwise. The bond market is acting very goofy, and the credit default swaps are higher than the great financial crisis. So the credit default swaps have called the bluff of the government ever since the great financial crisis. So how many times have you heard of the debt ceiling getting risen, or the debt, it's not, there's going to be a problem, right? The bond market called the bluff on it every single time. But this is the one time where it is behaving very differently. So, I don't know what the outcome will be, but I can look to the bond market and see that credit default swaps are insane right now, and that the 1 month, these are all acting very odd, that the 1 month pays the absolute highest yield. Nobody wants to buy it. Nobody wants to hold that into June with concerns that they won't get paid. And so you have all these short dated yields that are the highest out of all of them. The longer dated stuff, your 5, 3, 2s, 10s, they're all, at about 3.5%, right? But your 1 month is 5.5%. Your 4 month is 5%, 3 month is 5%, 6 month is almost 5%. All this shorted dated stuff that's going to be here in 2023, people don't want to touch it. Why? Are they worried that there's not going to be a payment that happens from the Treasury? So there's odd behavior happening here that they don't want to be caught wrong-footed with the Treasury in this particular situation. And then all those credit default swaps are just insane. So I know we're used to it, and we say they're always going to raise it, but just know that the bond market is actually very concerned that they're not. So waiting on Bitcoin today. I showed this, that we can have these types of wicks. These types of things do end up happening in these types of scenarios. That is what we actually saw happen back in here. We actually did end up getting those. I didn't delete that thing, right? It wasn't on this chart. Anyway, right in here. That's where we're at. And then we'll move our way back over here. So just waiting to get through this. And I had made a prediction in yesterday's video. I think we would see some insane volatility within 48 hours. I also said that in the live stream. I said in the live stream that I wanted to say 12 hours within 12 hours, but I didn't want to back myself into that corner, so I'd just say 48. But yeah, we started to see it yesterday. Now it's kind of waiting for the big follow through. So I got my cash ready to rock, man. I'm ready to stack. And should we get a big scary moment happening in the market, I've got my cash ready to rock. So as we start today, we see that the market is red. We still haven't recovered off of yesterday's price action. Looking at total kind of says the same story, that, hey, it looks like we're probably heading lower. And I would expect that here. to happen for total, which is likely telling us what's happening over there with Bitcoin. We got the stock market that is definitely not doing bueno this morning. You got the stock market down 350 points to start the day off. You got gold pulling back now. Gold not able to get through. You got these yields that are still super high, these short-dated yields, as nobody wants to buy them heading into the debt ceiling standoff. However, when it comes to inflation data today, we did get positive inflation data on the producer price index, which is a measurement of the change of the price of goods that is sold by manufacturers. And it's a leading indicator of consumer price inflation, which accounts for the majority of overall inflation, which we registered another 0.2. The expectation was 0.3. This drops the year over year down to 2.3, with the forecast being 2.4. In the next 2 months, if we register similar numbers to what we've been registering for the last 10 months, probably expect this thing to drop significantly. You can already see we're back into 2018 levels. We may see this thing get way down in here to like these 0.7s, 0.5s, and 0.3s, these really low numbers. And this is the leading indicator of inflation. And we know that we got a good CPI yesterday. So, all right. One quick more peek at the stock market as is getting going. 383 points over there on the stock market. This was what we were talking about yesterday, and whether or not you're getting through an all-time high. That would be the only circumstance in which I would change my thesis on Bitcoin, that Bitcoin could go into an all-time high if the Dow went into an all-time high first. But there you go. That's the way we're starting off this Thursday, guys. Pullback in stock market. Bitcoin after its big move yesterday, or volatile move yesterday. A lot of people immediately, like I said, guys, you're going to see people call for manipulation. You're going to see people come up with stories. There's going to be a narrative. Yesterday, people immediately tried to find a narrative and went with the U.S. government selling off 10,000 Bitcoins. It was disproven later in the day, but whatever. That's good. It's going to happen. Just be prepared. There's going to be some story that's going to scare the living daylights out of you. For me personally, I'm just going to ignore it. And then I'll have 100,000 comments every single day. Don't you understand? This is the debt ceiling. This is what the U.S. government is doing. Like, okay, I get it. But okay, I'm going to ignore narratives. All right, guys. I think that covers it pretty good. You have a pretty big mix out here. You got stuff in the NASDAQ in the green. So is the NASDAQ still green? It's about even, down 13 points. S&P down 25 points. It's the Dow that's taking the beating today, down 380 points. And we're seeing kind of a slight tick up there over in the DXY, as we're seeing a pullback in metals happen at the same time. Metals were doing okay earlier this morning. Silver was down about 3.5%, but it looks like it's still falling. And gold was positive, but is now flipped negative. Mix over here, really kind of tech stuff, right? Roblox, Google, Meta, Amazon, and then, Caterpillar, Microsoft, Ford, these guys in the red. Nothing too crazy, kind of balanced out here over here. But you can see that the Dow Jones is the one taking the big herder. There must be a lot of banks in the Dow Jones. I'm just taking a random guess. It's banks. As for XRP, as we know, sitting right here on top of that 200-day moving average. Ethereum still struggling here at these price levels as well. And I think that's going to cover it. So today, it's still just pins and needles today for me personally. We're at 27,274. Kind of waiting for, La Plungeruski to show up in here for Bitcoin. But I'm a buyer down here. I'm a buyer. If we get that big scare, see everybody scream manipulation, blaming the U.S. government, I'll be coming in hot. Check the tape. All right, let's go ahead and jump into the chat. Chris Perez says, "Do you see Wyckoff and EOS from November to now?" EOS just looks like any of them. EOS is essentially abandoned, right? I don't know if I'd call it Wyckoff. It's held the floor since June, right? So you've been here for going on 11 months. Supportive level has been here. This in 2018 and 19, looking back on assets that had done this and gotten back to this level, this had held them as supports. The only problem with EOS is just developer abandonment, Twitter abandonment. You know, are there market makers on this thing anymore? It's a big question. This was this one used to have hundreds of developers, and totally went the opposite way. So I don't know if I necessarily say it looks like Wyckoff accumulation in here. You'd expect to come higher and then move into spring phase, but it's really just not holding its own very well. Thank you, Chris. Robert Barker. Hey, nice name. First time super chat. No message, but I'm sure it'll come later. Thank you. Blockfella. BCB, aka the Blockfather. Thanks for everything, man. Always appreciated. XRP Daily. We have the 1, 2, 3, 4, 5, 1, 2, 3, 4. Working on 5 of 5. Let's go check it out. Oh, I'm already on it. All right, let's get this. We'll get everything off the screen. Goodbye. So I'm assuming you're going with 1, 2, 3, 4. What am I doing? Yeah, I forgot you can't do that. That's why I always have to use my little tool. 1, 2, 3, 4. And then we are on 1, 2. If you were to do it like this, it'd be like this. And ignore the depths of these. These are just random guesses. That's what I'd be looking for. So when it comes to spotting the crashing structure, one thing I always like to say is it's nearly impossible to identify it until it's actually already completed. Or not that it's actually completed, but that once you get to the point of where you spotted the 5 waves in here, like once you see those 5 waves, that's when it becomes obvious. That's when it becomes, like, for me personally, that's when it becomes tradable. So up until that point, you're kind of making guesses. You're kind of saying this could be it. It looks like it could be it. But once those 5 waves become identifiable in here, that's where like these last couple of waves are very easy, and it becomes much more tradable. Because then you kind of have like, all right, I can long it to here. Then I got to short it from here. Then I know go YOLO in here, work its way back up there once again. It's probably going to pull back from here, and then you can go off and away. Like it's very consistent after that point, but from my own experiences, trying to identify it very clearly before it gets to there, very difficult to do because you're kind of guessing a lot of different stuff. It definitely could be. It definitely could be. But for me, you'll see me start talking about it on the YouTube channel if this emerges, right? If we actually end up getting that right there. Prior to that, I'm not going to come on. Definitely not going to come onto the channel and speculate that until it's seen. And then once it's visible and it's very clear, we'll do what we always do and pull up the old video. And I say, here, let me explain this to you and show you how this goes. We roll back up to wave 4 within wave 5. Then we're going to go on and plow to set the final wave. And that's where it's YOLO. But I can't do that until we get a definitive move to happen in here. Because as of right now, where are you at? You're right on that 200-day. So we'll see. But I like what you're looking for. I've definitely been looking for it, Blockfella. But it's just real hard to say it is it until we're done. Right, so technically what you could have is like, you could still have this as being 1, 2, 3, 4, 5, right? And then A, B, C. And then we end up with like a 1, 2, 3, 4, 5. And then this whole structure ends up being an A, B, C correction. So Yeah, that's all. That's still possible too. So when it comes to like crashing structures, the way I treat them is I don't try to guess them ahead of time. I treat them once they have gotten really obvious. Once they're really obvious, that's when they're tradable for me. And the obvious moment comes once you have that already visible. Once that's visible, then it becomes clear as day for me. And like, it's one of my favorite ones because, you know, people, they love to do lots of stuff. Like, what are we talking about over here? We're talking about head and shoulders, right? Like, that's the first thing anybody ever learns ever when it comes to charting. So when I see like major accounts on Twitter posting head and shoulders, which I did see today, I was saying to myself, man, like, I actually, I do judge people. I do judge people. When I see their TA on Twitter, I'll be like, you have no idea what you're doing. Uh, and there's like people who like sell books, and there's people who like go on CNBC and stuff. And I see them post their TA, and I'm just like, you've been faking it until you make it the whole time, dude. But anyway, the first thing anybody ever learns is head and shoulders. You learn it before bull flags. You learn it before bear flags, bear pennants, cup and handles, Wyckoff accumulations, Elliott waves, everything. It's the first thing anybody ever learns is the head and shoulders pattern, right? And the thing about the head and shoulders pattern is like we can identify it, we see it, but like even when I post on my Twitter, like you can have fake outs in that so many people will see the head and shoulders that they don't always play out. They can always morph into something different. So it's why I don't really like the head and shoulders because I don't think it has a big enough win rate. Like the hit rate isn't good enough on it, but we can all spot them. We can all see them. If you don't see the head and shoulders here, I'm sure you do, but am I blind? What is wrong with me? Here we go. It's in here. There it is. Right. Not good enough. So that's your head and shoulders right there. Very clear. Then what you break through the neckline. A lot of times you back test the neckline, and then you go down into the plunge, full depth length of head. It's usually the first. Hey, we're getting a pretty good breakdown in Bitcoin. Looks like we're actually getting it right now. We'll see. We'll see though. It's the first thing people notice, but I don't find that the hit rate on it is good enough. So like when we started talking about all this, I started talking about it on Twitter. I started talking about it. Back in here was just saying, hey, you know what we typically see on April 5th, I put out a video like what I would guess would happen, right? And that we'd see a short squeeze and then this. And so we've been tracking this over there on Twitter and on YouTube and all of that. But it just so happens to look like a head and shoulders. But the reason I'm talking about that is that I don't find that the head and shoulders hits frequent enough that you can get kind of wrong footed on it. And like the place you're supposed to, there's two different places you can take a shot at a head and shoulders. So we don't talk too much about like active trading on this channel. We're usually just looking at charts. But what people will typically do is to take a shot at it at two places. You can't really take a shot at the top of the head. You actually have to take the shot from retracement levels. So you take your shot in here, you go short, right? And you set stops above the final Fibonacci retracement levels. And then the target's going to be the breakdown level of where you are right in here. So measuring the head, the distance of the head through the neckline gives you the target of how deep to go on a short. And the shot gets taken right there at the retracement levels with the stop set above the fibs. That's a pretty good risk to reward ratio on taking that type of shot. That's a 9.22 to 1. So like even if you get this wrong 50% of the time, right? If you get it wrong 60% of the time, 70% of the time, if you're getting it right 30% of the time, like you don't have to be a good trader, right? Like I flip, you know, you could flip a coin and do better than that, right? But if you get it right 30% of the time, that means 7 times you're going to lose 1.89%, but 3 times you're going to gain 17.46%. So what is that? That is 51%, technically 52.5%. But you're on those 3 wins that you have, you're going to make 52.5%. And then on those 7 losses, you're going to have 13.7% that you're going to lose. So you only get your shot right 3 out of 10 times, but you made 52.5 versus losing 13.3 or whatever. So that's where the shot's clear. But the problem is most people don't do that, right? In this time period, people are still super optimistic that things are going to go to the moon. So they start recognizing the head and shoulders at where? Right here at the neckline. So they take the shot at the neckline. But the problem is that it can be so volatile in here and tricky in here. I don't know what the literal percentage of times that head and shoulders will fail on. But it's much harder to have a risk management on an actual trade right here. The only way you could technically do it in my thoughts would be that if you're going to do a short position and you enter on the break of the neckline, let's say you make the entry here, right now, you're going to have to pick somewhere up there to say that it's going to fail. Would that be just right back through the neckline? Maybe, but you can see how volatile this can be because you could just get your short just squeezed really fast. It's really possible. And then if it turns back up, just much harder to set the stop unless if you're just going to be literal and use the trend line. And that even when you look at this in here, is the trend line really that clear? Where is the trend line? Is it technically way down here? Where you could see it violated it, then it popped back up. I don't know. Good luck. I'm not a huge fan of trading the neckline of a head and shoulders. But for me, it's more about if I'm going to take a shot, it's going to be up here in the retracement levels with the stop above the last Fibonacci retracement level. So why did all of this get talked about? We're talking about head and shoulders, bear flags, bear pennants, bull flags, bull pennants, cup and handles. There's a plethora of them, right? It goes back to what we're talking about here. The hit rate, in my opinion, is way higher once you get to this phase with the crashing structure. Once you have that visible on the chart, it's almost like I'm pulling this number out of my backside. I'd say it's got like a 90% hit rate on what happens next. And that you're going to go back up to wave 4 within wave 5, and then you're going to go set a new low, and then you're going to come back up. And then you're going to go sideways, and then you're going to break out. I would say that happens 90% of the time, if not more. I just rarely, I can't even from my memory pull up a time of where that failed on me. Whereas trying to play the head and shoulders game, many times failed. Many times it has failed on me. Very difficult to trade. I find the only real trade to be taken on it is to do it at the retracement levels. Otherwise, at this point, it's very difficult to risk manage a trade from right here. But on this one, it's almost clear as day to be able to play this range after you visibly have the 5 waves. So it's very difficult to notice it ahead of time. We can make speculative guesses. That's what's going to be playing out. What's my speculative guess? It's probably what's coming. That's typically what happens in a spring phase of Wyckoff accumulation, which this would be our spring phase. We typically are going to have that exact thing. So I'm not going to pull up all the charts right now. Maybe I'll have it prepared for us for tomorrow. But that's usually what you do see. You see that standard crashing structure on the spring phase to finish off Wyckoff accumulation, and that's exactly what this is. I don't usually try to take shots at it to guess it ahead of time. And I would have a hard time doing it now because I'd be second guessing myself too much because of the fact that the 200-day moving average sits right there. Go plowing through it, then all this makes perfect sense, right? What's going to end up happening? Held the 200, broke through it, back tested the 200, and then plowed down. Probably goes back and tries to hit that 200 one more time as the 200 comes through, right? And then boom. That would make perfect sense. But I don't usually take stabs at it, trying to guess it in the heat of the moment. It's once we have the 5 waves very visible, this range is very clear for me. So if we get it, we'll be talking about it a whole lot. There we go. I just rambled for a long time about that. If you liked my ramble, please hit the thumbs up button and like this live stream. All right. Thank you, Blockzilla. Eddie Ross. Memes making you feel roaring 20s vibe, BCB? No, I don't think the memes are that huge. And it's not real. It's like mostly scams, right? What is most of it? Like there's a couple of memes out there, but now it's like mostly scamming. Right? How many rugs are happening right now? Gosh. But no, man, roaring 20s, dude. Like I've lived through the alt seasons of 2017. I still don't think we've seen anything like what that was like. But thank you, Eddie. Robert Barker. Thank you so much, Robert. Hi, BCB. I'm a huge fan. I've been watching for 2 years. Could you say hello to my 3-year-old daughter? I don't know if it's Millie or Miley. She always watches your videos with me and loves watching you fly to the moon in the intro. Hi, Millie. Or Miley. I hope I don't have it wrong. Thank you for watching. I hope you have an awesome day. Let's see, you're 3 years old. So what are you probably doing today? You woke up. Probably had to get your clothes checked, make sure you're cool. You probably sat down, you had some breakfast already. You might have the iPad out, watching a little bit of Mickey Mouse. What's that guy's name on YouTube? I don't know. I have a little kid too. I have a little boy about that age. So that's awesome. Hi, Millie. Gator. Coming in strong with 5 blockchain backer memberships. Thanks, man, Gator. Oscar Hernandez, my dude. Where is Whiskey? Every time I see you, Oscar, like you and Whiskey go hand in hand for me. Haven't seen Whiskey in a week. Came to the comments really quick, and the people would like to see the algo chart. Thank you, BCB. LOL. Ooh, algo. Yeah, this is one I'm not touching. Yeah, I'm just not touching that. So where are you at, right? Pretty easy shot to take. That's even dipped below that low. I was going to say, yeah, I mean, you pretty much have your low to go ahead and take a shot at it for it to not set a new low, but it already has. Algo's tough, right? So like Algo had inflation issues for a while. Then Algo got deemed as a security in a lawsuit, and Algo's developed like one of the literal worst developer abandonment issues. So I don't know why. I don't follow it closely. I know a lot of people do, but year over year, negative 57% developer, and just since December, negative 45%. So I'm not seeing too many things that are optimistic about Algo. I mean, the only things to say is that, hey, I mean, look where you are. I mean, you're at like ridiculously low prices. Let's see what the market cap looks like. I know a lot of you care. Okay, so look at that. I don't know, man. If you're from a technical perspective, if you just wanted to take a shot, you could, and set that stop loss. I'm not telling you guys how to trade. You guys do whatever the heck you want. If I was taking a shot at Algo, which I'm not, but if I was, I would be looking at that low. That low is a little over 3% away. I know this right there. It's at 3.5%. So I'd probably give myself some room to breathe, maybe 4.5% to see if it would hold. Which means if I'm moving over to the Algo USD, I'd want to give myself room to breathe. So 4.5% down would be there at about 15.6. And if you wanted to give even more room to breathe in case it goes for a stop loss hunt, 15.5. But as you saw over there on the market cap chart, it is still holding that low. Why would the price dip further than it would on the market cap? And it's because inflation, right? So there's more coins in supply, there's more coins in circulation, which means each coin is technically worth less, even if the market cap sustains itself. But currently, right now, the market cap has held its current low. That's optimistic still. And so for those who love algo, it's like at the lows. It's definitely at the lows. Like it's like if I was caring about this asset, this is probably my buy zone. But knowing darn well, very close to it breaking. So if it did break, I'd be probably changing my mind pretty quick. Again, problem with algo, like just a decision I'm kind of making right now when it comes to accumulating assets for me personally in this time. I am focusing on developer growth, which one has more developers being added and growing in interest. So of course, looking at their charts, but at the same time, paying attention to what has developer growth, what looks like it has a pretty bright future. Because I've gotten burned in 2021 watching assets that were in the top, falling from grace, and things that may have given the clue would have been developer decline. And so if you look at the correlation between developer growth and developer decline, it seems that, you got a better shot, at least, with developer growth. It's not necessary, right? Because Ethereum Classic, YOLO crazy with developer decline in 2021. Dogecoin, crazy. Algo does get a lot of YouTube influencer coverage, so that's beneficial to it. But it is like I'm not joking, one of the worst with developer fall off. So I don't know why. If you're in algo, if you know like content creators who cover it, maybe find out what's going on and why that is. I don't know, but it's like really, really bad. I don't know why. If maybe it's got to do with the SEC or whatnot, but finding out why are developers abandoning algo? I don't know. I lost my XRP chart. Let's see if I can read that. Kiri says, do you think any of this AI news and talk will factor into the next crypto bull run? I will say, honestly, I don't know. I'm not sure how to interpret it. I know it's a buzzword. I know that every company is trying to make sure that they say AI 100,000 times in any type of marketing, as it is the buzzword right now. Will a lot of cryptos use the word AI just because it's like the most important word to say right now, even though they have nothing to do with AI? I've even seen Justin Sun like using AI for Tron. Like, no. But everybody knows use the word AI. Obviously, it's an acronym, but say AI. And so I don't know. I don't know if it will or won't. Why? Like, I just don't know why we need a cryptocurrency for AI. You know what I mean? Like, am I missing it? Like, maybe I'm missing it. Like, I just technologically don't understand. But I'm like, why do we need a crypto for that? I don't know. Maybe we do. Maybe I do, and I'm totally missing it. But I don't know. This is a great question by DC. He says, do you plan leverage for XRP? If yes, what price? What a wonderful question. And I'll say it very clearly. No. No margin, no leverage ever in any circumstance. That is what I stand by on this YouTube channel. Any of you who do that, you are risking losing everything. And anybody who does do it, you've probably lost everything before. So no, I do not support leverage. I will never use leverage ever. So, good luck. Yeah, everybody else is saying the same thing in the chat. Yeah, D King says, "Dang, BCB, ouch." Look, there's probably somebody listening to me there who just probably decided, okay, I guess I should never use it, and maybe it saves their financial life. You know what I mean? You know, it happens all the time. These 100x leverage exchanges were not built on making customers into millionaires. Just know that. They are built on taking all your money. All right, let me see what you're asking here. Hodling Nate. Sorry. Dude, my eyes are not working today. I don't know what's going on. What did you ask? Okay. I'm going to look this chart up first because I'm not familiar with it. It's on Binance. Me personally, I wouldn't touch that with a 10-foot pole. I'm not going to mention that on the channel. I don't know what that is. But that went up 1,366% in under a month. And it's been nothing but pulling back right now. Maybe that's an ABC. I don't know. But that's, it's still at this point right now up 500% since the low of just a couple of months ago. So I don't know. And that always makes me uncomfortable when you have straight lines up like that way too fast. I know that's what degens love to YOLO into, but I can't bring that up. I'll have to research that to understand it more because I don't know what it is, and I have to assume every single time that if a coin gets brought up and it looks like that to me, that it's trying to make the audience's exit liquidity. And obviously this isn't your first time donating, Nate, but I can't bring it up. XRP Max says, "Hey BCB, what's your thoughts on Monero?" Dude, I love Monero, but the world doesn't love it. Everybody says, "Oh yeah, I don't want the IRS spying on me if I spend $600. Bitcoin gives me freedom," yet it's a public ledger. Monero is considered the gold standard of privacy coins. I own Monero. I've got my Monero locked away. Monero is a zero or hero play for me, for sure. Monero is one that's just kind of held its own through all this time, right? Like we just saw, where is Algo? Algo's way down here, right? But Monero has just kind of still continued to hum along. Doesn't mean it's not going to break down, but gosh, when are Bitcoiners going to wake up? Like if you're gonna believe in sound money, if you're gonna believe in proof of work, and if you're gonna believe in it like being real money, this is it. You guys know I don't talk about Monero very often. I'm not sitting here trying to create an argument over Monero versus Bitcoin, but I think Monero should be the thing. Prosperity Fund. When XRP 36 cents. Awesome. That's the opposite of when moon. So we will go to 36 cents the day you buy. Once you buy, we're heading to 36. Oscar Hernandez's tax accountant asked, "Hey BCB, where'd you learn your charting? In college?" No, it is all self-taught. So I started a business in 2016. Worked about 100 hours a week doing that. Made nothing for the whole year. And then by the time my business was fully sustainable on its own, about a year later, I was only working about 4 hours a week, if that, and making more than enough money to support my whole family and for my wife to stay home from work. So it was kind of like a crazy investment of my time that ended up paying up really well and became like the 4-hour work week for my life. And in that business, having to do a tremendous amount of forecasting, like it was just constantly being in Excel sheets, constantly trying to forecast a silly amount of stuff. And if you messed up any of the forecasts, it cost you tens of thousands of dollars. And having to like be so engraved in that, I had gone back to get a second college degree when I was like 28. And so I had a business degree, and then I went back to get like a computer science degree. And I actually ended up dropping out of college in that second degree because I'd started my company, and my company became so successful. But even then, getting a science and mathematics degree, completed all of my science, completed all of my mathematics. So I've got upper level university mathematics, completed all of it. I just have a couple computer science classes to go back and actually finish my degree. I think I could finish my degree in under 2 semesters. But that was, when did I stop that? 8 years ago, I stopped that. But once I had all this spare time and already engraved in all this mathematics and engraved in forecasting for my business, that was my main priority in my business, was forecasting. I had spare time, and I just spent a lot of time in crypto and hanging out in here, and charting, learning what was wrong. I think that's really the first step, is that you kind of have to weed through a lot of the BS and learn what's wrong. And like the first thing is constantly looking at Head and Shoulders and guessing when Head and Shoulders are happening. Now, do I think one is probably playing out right here? Probably. But you will find that most people, the lazy thing to do is to learn this one pattern and then try to spot it everywhere. And you'll find that they fail more often than not. And I bet somebody's listening to me saying, yeah, he's actually kind of right, because that's probably happened to them. And I think it happens to a lot of us. And then just kind of learning more and more about, like, when you're trying to predict time, when you're trying to use trend lines, and you're trying to say, this is going to happen here, and this is going to collide right here, which means that we're going to bounce back. And I put this line here, but that's silly, but it's totally going to happen right over here on June 9th at 1600, or like the guy who's asking when 36 cents, right? We know with 100% certainty that it's going to happen on May 18th at 12:32, right? We just know that because we're going to draw some lines, and these lines are going to collide, and magic is going to make it happen, right? That's a joke. But realizing, just learning a lot. So it was a lot of trial, a lot of failure, and a lot of getting things correct, and then learning, what do I not need to waste my time on, right? And so when I come on here, I try not to waste any of our times talking about trend lines, right? I never see me doing it, because I think they are a complete waste of time. I think they're a waste of all of our time, because what is a trend line truly doing? It is trying to find a collision of the X and Y axis of price and time. So we're actually trying to predict time by using diagonal trend lines. I'm fine with horizontal trend lines. I'm fine with verticals. Obviously, a vertical doesn't matter, but horizontal price levels. But yeah, no, it wasn't something that was taught in college. It was something that was when I had 36 hours of free time per week and was hanging out in the charts. So I spent about a year and a half spending 50 to 60 hours a week charting before I ever started recording on YouTube. And I decided at that point, all right, let's see what people think. And people liked it right out the gates. So it's been a blessing. It's been the most rewarding, I don't want to say career, but I guess, like, this has been the coolest thing I've ever done in my life. You know what I mean? Like, yeah, I don't know. It's been great. All right. Prosperity Fund. Thanks for the super chat, but I already covered you. When 36 cents. It's the day that you buy. That's when we can finally go to 36 cents. We're just waiting on you to push that buy button. Notorious Saruf says, BCB, do you think Link will new all-time highs possible this year? I don't personally think so. I'm sitting here playing a retrace on Link, but it's not wanting to fork it up. Link also is seeing developer decline too. Well, thank you, Eric, saying we're blessed to have you, BCB. Thank you. We truly mean it, brother. Thank you so much. Ryan says, you the man, BCB. Thank you. Thank you. Thank you. Prosperity Fund says realistic XRP price dump buy zone 20s, 30s. Bro, do you not watch any of these YouTube videos? Is this your first time here? I think we talk about it like 4 times a week. Maybe. It might be. I'm going to wait for him to answer. You can just type in the chat. Is this your first time here, bro? What are the takeaways from this morning? RAM. So Bitcoin still waddling along here. We're poking through multiple times. I think we're still waiting on the bigger move to come. I think yesterday was just kind of a warning shot, and everybody wants to say, oh no, it's manipulation. It was the U.S. government selling Bitcoins. No, I don't think so. Looking at XRP, it's still sitting right there on top of the 200-day moving average. And, you know, I've obviously deleted my fractal and I have to reset it. And just, fine, I'll get it. There we go. We're still just creeping along in here. But we're at an interesting level of being at the 200-day moving average currently right now. If this goes into full-blown Wyckoff spring, right, if we do, you'd still be looking at a couple more waves down, then probably pausing out before that final kind of flush comes in here. But still, it's important to pay attention right now as we are at the 200-day moving average. But for Prosperity Fund, did he ever type in the chat? Nah, I listen to intros and then I go to work. What? You listen to intros and then go to work? What does that mean? What does that even mean? Just turn it on and jam the boom, 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 boom. You just jam that and then you're out. Mid 30s, mid lower 30s seems about right. If that's, you know, that's the ultimate. If we get here, right? If we get to the mid to lower 30s, I will have fully deployed my capital. That would be the end for me. And otherwise, I'm just kind of a nibbler, nibble until if that shows up. My bags are already packed. If we take off without me being able to just add more, whatever, I've had 5 years to keep adding. I will survive. But if I'm going to deploy serious capital into the market, I would like to see lower 30s in order for me to do it. Sick thinker, I've never seen you use this chart before. Yeah, okay, Prosperity Fund. I think we got a troll. But whatever, man. I'll take your donations. All right. Gino says, do you think the possible debt ceiling issue will affect stablecoins, i.e. USDC? I don't know. I am unfamiliar with any impacts that the debt ceiling would have with USDC. Now, if you're saying whether or not it would, if the debt ceiling causes an issue for the United States government to default on their debts, would that impact the price of the US dollar or the value of the US dollar? Maybe. Does anybody have speculation on what would happen? I don't really know. If the US defaulted, what would happen to the value of the dollar? Right? You got to think, like, they're not turning the printers on, right? They're not turning the printer on. And instead, they decide to default. 60% less, would it though? Or would it make like the dollars more valuable because they're harder to get? You know what I mean? Like if you kind of process that in your mind, like would asset prices collapse because everybody's like, oh my gosh, giving my dollars are impossible to get? Or would it be the other way around? Yeah, asset sell-off. Right, so asset sell-off would mean increased value of dollar. Yeah. Yeah, I'm reading you guys in chat. People still use USD, so probably raise USD. No choice. They must print, otherwise no value. Well, not necessarily. If they print, like it loses value, right? I don't know. It's weird. It's weird. Right? It's never happened before. We've never had that happen before. This would be a scenario that we've never lived through. All right. Pat says, hey, just saying hi while I'm cruising home in the car, listening to the dulcet tones of the BCB. Thanks, buddy. Sweet. You like my music. All right. Well, thank you very much. We'll kind of recap this real quick, guys, and we'll get on our way for the day. Bitcoin still just kind of poking right on through. I think we're working on our way down right now, but we'll know if we get the plow to take place in there. There's kind of another visualization. Everybody's finally starting to see the head and shoulders starting to emerge in here, looking as if a breakdown is already underway. XRP down at 42 flat. Looks like we could just be poking down into the 41s here in just a moment right now. Ethereum still hovering right there on top of 1800. Dow Jones taking a whooping today, down 350 points so far. It looks like the Nasdaq and S&P have flipped red. Nasdaq is down 0.21% with the S&P down 0.6%. Most assets are in the red except for like Google, Roblox, Meta, Amazon, and Netflix. Otherwise, whoosh. Gold down $2,018. Platinum down. Silver down almost about 4%. Pretty big one. DXY is the one that's kind of up today. As we can see, it's moving upward. However, still within the range that it's been in dating back to April 14th. So this has been about a month-long range on here for the DXY. Economic calendar, the big news today was PPI, the Producer Price Index. Producer Price Index is a measure of the change in the price of goods sold by manufacturers. It's a leading indicator of consumer price inflation, which accounts for the majority of overall inflation. We registered a 0.2% for last month. Expectation was 0.3%. And year over year, we've now dropped all the way to 2.3%. Expectation was 2.4%. If you zoom out on here and take a look at the measurements of this dating back to 2011, you can see now being at this 2.3%, we're within historical norms, and that the next two readings that are coming out will be replacing these larger ones of 0.9% and 0.1%. And as you can see, we've averaged practically zero over the course of the last 10 months. So go ahead and register a couple of low numbers. We'll see the PPI drop down into below 1%, which will be below historical averages here once we get into July. So inflation, optimistic signs that has cooled off. Bigger news kind of when it comes to deflation has been with Ethereum. It's been just absolutely getting deflationary. My wording is wrong. We have seen a massive amount of Ethereum getting burned in relation to the amount that has been issued after the new proof of stake model, and especially with all this meme coin mania taking place recently, with all the things going on with Uniswap flipping and flopping between every meme coin out there. The last week has seen a rate of negative 2.93% deflation for Ethereum in just the last week. And since its actual issuance and the switch over, it's burned 213,000 Ethereum since the proof of stake model was implemented. And also with the lockups, I saw this over there on Twitter today. CZ Binance have retweeted that, as you know, with the recent upgrade in Ethereum, it unlocked all those who have had their Ethereum stuck in there for like 2 years practically. Those were unlocked. Those people were allowed to withdraw those. And then just today, the lockup has now set a new all-time high. So you did have initial withdrawals that took place there once that lockup was released. And then enough people have now put their Ethereum back into lockup that now it's at another new all-time high. So they've gotten beyond that point of forced lockup. They're now into
choiced lock up, and it's at an all-time high again. So quite interesting there for Ethereum. As for the news, nothing but yapping heads. A lot of yapping heads going on out there. Otherwise, we're just kind of waiting on Bitcoin to get a further move down. It's my thoughts, at least. It's my best speculative guess that we are still going to see a further move down in Bitcoin. I've got my funds ready to be deployed. My main allocation is likely going to be XRP. There's a couple others on my speculative guesses that I'm going to take out there too. I'm not going to share those just yet, but definitely buying XRP. So I'm cool. I'm ready. And let's rock and roll. But as of today, we're starting off. We got some red, some continuation of yesterday. Same goes for the stock market. Stock market taking a little bit of a beating right out the gates. We'll see how things go throughout the rest of the day. Otherwise, as Sick Thinker says, hit that like button, BCB fam. But on that note, I'm going to go ahead and wrap this thing up. So that's what is going on today. Red day, continuation of yesterday. But all right, guys, that's going to be it for this one. I want to thank you so much for watching. If you could, please hit the like button. Wait a minute, I've got my outro wrong here. See, this is why it's fun. It's better to record than do live. I screw up way too much live. All right, guys, that's it. Thank you so much for watching. Please like this video, like this live stream, and give it a thumbs up. If you're new to the channel, please, what the heck is wrong with me? I'm trying to read this thing. Let's just see if I can do it off of memory. All right, guys, that's it. Thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice, and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember, I got this one. I can remember this one. The blockchain backers got your back. Have a good one.